Hello traders, my name is Horvat and welcome to a new video analysis in which we will cover euro dollar, cable, dollar CAD, dollar yen and crude oil. Now on euro dollar we are still tracking this wave C that could reach much lower levels at the start of 2015. We expect that wave C will break beneath these lows from 2010, so we will project actually that wave C could equal to wave A. This comes in if wave A was around 3,600 pips, then wave C, as you know, could fall much deeper. Okay, so there is definitely room for much more weakness ahead. However, on a daily chart we see prices just breaking down into wave 5 of new reworked wave count after recent sharp reversal from those 1.2570 resistance area at the start of this week. So it looks like that this was an irregular correction for a wave 4 and that the impulsive wave 5 is underway clearly because this decline on the intraday basis is having an impulsive shape. Okay, so based on these targets for wave 5, we see wave 1 that was made in around 500 pips. Okay, so if we take this distance and measure it from a wave 4 high, then we come in with the levels around 1.21. okay, but we could see definitely a test of 1.20 psychological level in days ahead. Okay, so we are bearish on euro dollar and expecting more weakness as long as this market is trading beneath 12570. okay, however, be aware of this wave 2 pullback. It could occur once a new low will be reached. Okay, I'm sure that there are a lot of stop orders from those who are long on euro, are stop orders beneath this level, so be aware of a spike to those levels, let's say 12220 or around there, and then keep an eye on a free wave rally. Okay, so this rally could occur at the start of next week. Okay, but after that rally, after a free wave retracement, we again will be focusing for more weakness. If from any reason market would rally in a 5-wave maneuver back close to this former wave 4, then obviously we would call end of a wave 5 at those levels, at those latest lows. Okay, but for now those lows back from December 8 are still in place. Okay, but looks like they will be taken out very soon because on the intraday charts I can see some corrective price action in progress. So that's for euro dollar. Now we will look at cable. Now on cable we are obviously looking at some similar wave counts. On a daily chart I made some adjustments. Here I labeled, as you can see, an extended wave 1 with a leading diagonal in this wave 1 position. Then we got a wave 2 rally and then a sharp sell-off for a wave 3, and now we are moving sideways. Okay, so this is definitely not a best textbook example for an impulsive price action, but it's valid. Okay, because wave 4, as you can see, this corrective rally did not retrace into the region of a wave 1. Okay, but the most important is that we focus on what it really matters, and that is that this decline, or sorry, that this price action for the last couple of weeks is definitely looking corrective. Okay, we can see very slow moves in tight ranges, and this move cannot be counted impulsively, so we know that it must be a correction as part of an ongoing trend which is clearly down. Okay, so we expect more weakness on cable. We'll be looking for a break into wave 5 probably next week, but on the 4-hour we are still looking at a little bit more higher levels because we are tracking this triangle here. Okay, triangle is an ABCDE pattern. It's actually a running triangle because here we can see that market moved into a new low before it made a new free wave to the upside for a wave C. Okay, so actually we have seen a 3-wave rally for wave A, then 3-wave decline for wave B, then 3 waves up for wave C, then this was a very sharp wave D. Usually one leg in a triangle will be very sharp and one leg will be very complex. Okay, so this wave count seems to be very clean to me, and I'm looking here for wave A of E, wave B, and we'll be looking for a wave C rally next week back close to 1570, maybe 7050, okay, which is the upper trend line. So actually a little bit more higher levels could follow before market turns to the downside, but the important is that we focus on lower levels because larger trend is down, and the next thing is we need to keep an eye on invalidation levels. Or triangle invalidation level, well, some would say that is this wave C high, but triangles can always get even more complex. Okay, I have seen several times in the past when we have seen in more complex triangle combination spike to beneath wave C and wave A. Okay, and then it came out that this was actually all part of wave C. Okay, something like this. So the important is that you identify the invalidation levels at the right price, and this highest swing high is actually the highest swing high of this ranged market. Okay, so that's for cable. Once the triangle will be completed, we will look for a break to a new low into wave 5. Okay, now here on a daily chart we have also technical chart. We can also see that market recently reversed from this 50 period moving average, which means that price action is still bearish. You can clearly see that we have seen a retracement from this moving average already several times in the past. Also the RSI is now a little bit higher than in the past examples, which is actually very good because we see that bears are actually collecting power to execute the move on the downside in a stronger manner. Okay, actually out from a triangle you will see a very strong thrust, so this is fine. And RSI is approaching to this 50 line, and I would love to see a reversal to the downside. Okay, so that's for cable, and now we will also take a look on reset on dollar CAD. Dollar CAD is bullish for some time now. On the weekly level, I just noticed in this week that our long-term projected levels were achieved. We were looking for a move into this yellow box here that I marked as a projected level a time ago. So actually this market could be coming to an end, but just because I was looking into this region, it doesn't mean that this market will stop here. Okay, yes, I'm looking for a wave 5, so obviously a reversal would make sense, but my count obviously could be wrong. Okay, so it's important to keep an eye on a proper price action. With that said, only a 5-wave decline away from this resistance level would confirm a topping place. Okay, until then you never know, this wave 5 can be much more extended. Okay, so on a daily level we are looking a little bit higher here. I'm tracking this 5 waves within a red wave 5. So if you go back to weekly, this is red wave 5 in progress that we are tracking on a daily chart. So this was my wave 1, wave 2, wave 3, wave 4, and now wave 5 is in progress. Wave 5 should also be made by 5 waves, and if we take a look closer here, you can see that latest move higher here to a new high, okay, was quite extended. And also market now slowed down for the past few days in what 100 pip range. So I see this as another correction that is part of this wave 5. So we could be targeting 261.8% 261.8% extension of wave 1 measured from this wave 2 low. Okay, so I'm looking for market to move close to 1.178. Okay, on this, for our chart, I'm looking for an extended 5th wave from that level. Okay, but obviously we could adjust the wave count to label this as a wave 1, wave 2, okay, and then wave 3, wave 4, wave 5. But actually that's not important. Both wave counts, alternate and primary labeling, are showing in the same direction. Even more interesting in this is this latest price action, which is already going very slow. You can see that it's much slower and it takes much time to unfold, okay, compared to this former rise, okay, which was obviously very short or sharp in a short period of time. So this was an impulsive reaction and this is a correction, okay, very simple stuff. So actually I see this as a pause within this uptrend, so I will be looking for a break into wave 5 next week, okay. This could be a triangle. It seems to be the best scenario now, especially if we consider that markets are slowing down for the weekend and also ahead of the holidays. So this is dollar CAD. Also we can take a look on this technical chart. We can see that here on a 4-hour also this 50 period moving average turned into as a support here back on at the start of December, okay, and again now here. Also here we have seen a reversal on the RSI on the upside from around this 50 level, and again we are at the 50 level on the RSI, so maybe new highs will follow here, okay, especially because we have the Elliott waves that supports that idea, okay. So let's take a look on the next market, which will be dollar yen. Now on dollar yen weekly chart we are tracking a bullish impulse. This is part of a very big flat correction. I will not show this today, but anyway the point is that we are looking for even higher levels as this market seems to be making an extended wave 5 here, so we have room for much more gains ahead, as we still see prices just moving a little bit higher here in this red wave 3. So on a daily chart we have seen recently a nice retracement back for 38.2% compared to former extended 5-wave movement that we labeled it as a wave 3. We projected a bounce from around 115.50 level. We have seen a very nice reversal to the upside from those levels after clearly corrective 3-wave setback, as shown here on this 4-hour chart, okay. Also the important is that at that time we identified a triangle placed in wave B. So if you have a triangle in the middle of a 3-wave move, you know that this must be correction, okay, because triangle cannot occur in a wave 2 position, okay. So if you would label this as a wave 1 and this as a wave 2, your count would be wrong, okay, because triangle can never occur in a wave 2. So because we had a triangle, I knew it that this was wave C and that this wave B, and that this leg to the downside will be wave C, final leg within this zigzag, okay. And so far market turned nicely to the upside, as you can see. More importantly, we have seen a break above this wave B swing high after previous break above this corrective channel line. So all indicators are pointing to stronger dollar yen, and looks like we could revisit this highs from start of December, actually by the end of this month, okay. So from a trading perspective, I would definitely like to be involved here, but we'll wait on this wave for pullback, okay. Probably it will unfold next week. So that's for dollar yen. Now let's take a look also on crude oil, okay. So crude oil is bearish for a while. We are well below 60 levels that I was looking for my long-term target. So on this weekly chart, looks like we have room for more downside. I'm looking for here on the weekly for a 3-wave rally up in a wave A and a 3-wave decline that we called it for a wave C drop, as you know, at the start of this year. And so far this is looking very good in our favor, not for the markets. So looks like that this wave C is still underway because it should be made by 5 waves, and this decline clearly should be wave 3 because this is the strongest move that we have seen in a while on crude oil and the strongest move usually belongs to wave 3 when you're tracking an impulsive price action. So after wave 4 bounce, we'll be looking for more downside into wave C, maybe even close to those levels back from 2008. Okay. Also, we are looking for even lower euro dollar next year, at least at the first part of the year. So definitely crude oil should remain under pressure as long as the US dollar is getting stronger. This was for the weekly chart. Now on a daily chart, we are still looking for even lower levels for this wave 3. We see prices just in the middle of an extended sub wave 3 of this red wave 3. Okay, so there's room for much more lower levels ahead. Actually, there could be some short trading opportunities in one of these coming fourth waves. Now on the 4-hour chart, I'm already tracking this one fourth wave very closely. I'm looking for a completed wave 3 here at the latest lows, which was around $53 per barrel, and looks like we are going now sideways. Now if we will not see a break to a new low today, then we could easily make one more leg to the upside, close to 38.2% retracement early next week. Okay, so my primary count suggests that we will see a retest of $59-60 per barrel to clear out all the stops here before market turns to the downside. Okay, validation level is at 63.70, but generally speaking, crude oil is bearish, so either we will continue to the downside from current levels or from another high. Okay, in both cases crude oil is bearish, and I will be looking for a drop towards $50 per barrel most likely next week. Okay, traders, that's it from me for today. I will catch you with new updates next week. I will also send you out a holiday shadow for the next week, and around the new year we will probably be working normal hours on Monday and Tuesday, and then we'll take off for the rest of the week. But obviously you will get a notification at the right time. Okay, so enjoy your weekend and have a good time. Bye.